Hey everyone, it's Stephen from Total Market Traders, and today we're going to be looking at Bitcoin again. So the reason we're looking at Bitcoin right now is just to sort of show a thought process essentially, very quickly. And so we can see here on this is a daily chart. We have two price patterns in play, and I'll quickly go over those. I've went over them in videos before and blog posts, but I'll just quickly go over them right now. So these blue lines here are actually a bullish triangle pattern. Goes with the trend, and when it breaks below, that's sort of violating that pattern. Now it did do that, it violated the pattern, which means it's a little bit more bearish. There was also behind that another pattern, which is a bearish reversal pattern. Now a bearish reversal pattern happens whenever price goes up to a point and then starts to reverse to the downside or whatever. It could be the opposite way around. Price will come down here and then start to form another pattern and then head up. But in this case, we see a head and shoulders pattern. Now, as you can see, left shoulder, head, right shoulder, neckline is along here. We got our first target was actually hit. This target has been in for months, and it's been a while since we came close to it back here. Didn't actually get it until maybe a week or two ago, and now that target, target one has essentially been reached. Got rejected very, very nicely with this very key pin bar, and we can see price bounced, came back up to the neckline, and got firmly rejected because it just stopped dead and then just started to sell off again. However, the interesting thing is it's set a higher low. So if we were to jump into lower time frames, we can see this a little bit more clearly. So we came back up here. It formed quite a nice price action, to be honest. It was a decent area to look for, entry signals, and you could have taken it to the downside. Also, as we can see, if you were to do that, there's also now a conflicting thing here where it's set a higher low. So this low is higher than this low, so it's starting to change its trend a little bit. But the other interesting thing is it's put a high in and then a lower high. So what we're getting essentially is another triangle pattern. This triangle pattern, these are like coiling moves where you see price gets very volatile and then starts to coil, and then it'll break to either the up or downside with a bit more volatility and strength. And if we pull up some volume, we can see that volume isn't as strong at the minute in either direction, and it's something to keep an eye on very closely. Now this is acting as downward sloping resistance, and this is acting as upward sloping support. So if we were to draw in this, we could see price come back to here, reject this little area, pull back up, and it would usually be within this sort of time zone, so within the next day or two, which just so happens to coincide with the futures contracts expiring on tomorrow, the 26th. Now, with that happening, it's hard to know what way it'll turn out. One option would be we could see that, and then price just goes like this, all the way down to 8k, which is our next zone, bounces a little bit, then heads to 5k, the ultimate target zone, to sort of look for any interest. Or let me get rid of that. Or we could see price come down, come back up, breaks above, tests here again, starts to break out, a lot more strength, and then heads higher like that there. Along those lines, doesn't have to be necessarily that exact pattern, but it could be something like that. That would be the bullish scenario. So the first one was the bearish scenario, that was the bullish scenario. Something to keep a very close eye on. If it's going to do that, just be very careful. If you're holding any alts, make sure you have a plan in place. If you're already in positions long or short, make sure you have your portfolio appropriately managed. If you don't know how to do that, that's something you need to know how to do. And it's something that we've been doing we do it across all other assets such as stocks and forex and commodities and whatever, but it's exactly the same thing in cryptos, you need to hedge out your risk somewhat, whether it be long some currencies and short some cryptocurrencies, and sort of take it from there. It's pretty simple once you get to know it, but it is something that will help reduce the downside risk of any, pullbacks the likes of Bitcoin, Ethereum, or Litecoin has. So that's something very quickly just to go over. Hopefully you'll have learned something from this, taken value from it most of all. And if you have any questions, obviously feel free to contact us on Facebook, Instagram, whatever, and we'll get in touch with you soon. Any requests as well, send them over and we'll try and fill them out. Thanks very much for your time, and see you in the next video.